Why you need to understand how estate tax works, all right? I'm telling you, man, a lot of people think estate tax is not an issue for them, and they're actually correct. There is no estate tax for the vast majority of people. But let's take a look at this article I just read. I'm not going to read the whole article because I just don't feel like it. But I wanted to read you the synopsis from a tax law prof, taxprof.typepad.com. Reassessing the cost of the step-up tax basis rule. So a couple of attorneys, one from Duke, Tulane, and Rutgers, say the stepped-up basis rule applicable at death, the IRC section 1014, has always been a major source of revenue loss. So when a tax guy says, or a government guy says revenue loss, that means revenue gain for you. All right, so they're saying as if it's a bad thing. Revenue loss for the government means revenue in your pockets. Your freaking money, man, it's not theirs. Now, in the absence of a meaningful estate tax regime, again, these guys write it as if it's a bad thing, taxpayers and their estate executors and administrators are likely to report inflated date of death asset valuations. As a result, the revenue loss associated with this tax expenditure, called the step-up basis rule, will surely increase markedly. The Internal Revenue Service will no doubt attempt to police excessive tax basis adjustments, but the agency lacks the resources to do so adequately. First of all, I can't stand these guys. This whole premise is mind-boggling. Whose flipping money is it, dudes? Huh? It's not theirs. It's these guys who die. It's not your money to determine what gets done with it. It's their money. Oh, it infuriates me. All right. So he talks about anytime you hear revenue loss, they say that as bad. That just means more revenue for you. So just watch that. Anytime you hear revenue loss, the government's going to lose money. Great. Make them for once operate on budgets. Ugh. All right, so now in the absence of a meaningful estate tax regime, all right, so you see where they're going with this here. It's like, oh, we don't have a good estate tax law because it doesn't basically take in enough people, like the AMT. All right, so basically the estate tax doesn't affect anybody other than the super duper 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 rich. And, of course, they're going to give all their money to charity anyway, theoretically, which is the foundations that they own and control anyhow. And theoretically, they're getting, the whole thing's corrupt. Anyway. So taxpayers, and the funny thing, they say now in the absence of a meaningful estate tax regime. Dude, it's been like that for at least 10 years. No, actually, since Bush in 2003, they passed their first tax bill. I mean, it's just freaking stupid, man. We haven't had a meaningful estate tax regime, and we're going on 16 years, man. Just the whole thing, these law professors, just the whole higher education thing infuriates me because it's just silly. It's silly. As a result, the revenue loss associated with the tax expenditure of a date of death asset inflated valuation. Well, what have they been doing for the last 16 years, huh? Will surely increase markedly. Why would that all of a sudden happen now? Why would not have it happen before? It literally makes no sense. Even under Obama, we had a significantly lower estate tax. Now, I guarantee you Obama would not have passed that, but he and John Boehner, and I give them both credit in a bipartisan way, they did some tax planning in 2012. They created a joint law that was very, very beneficial for the most part. Absolutely. Obama won more, Boehner won less. They came in the middle. Amazing how that worked. The IRS will no doubt attempt to police excessive tax basis adjustments. Well, what have they been doing for the last 16 years? But the agency lacks the resources to do so adequately. Well, apparently not with Lois Lerner out there. All right, so the issue that I have here. All right, so a couple things. They're saying, look, we need a better estate tax. So I'm going to read you here in just a second a new video how Bernie just releases Medicare for All funding mechanisms. So we'll talk about that because that is always top shelf for liberals, economists and liberal professors and just liberal politicians are raising the estate tax as if it'll do anything. And it won't, but I'll share with you here just on Bernie's thing is kind of funny. But number two is the idea we haven't had a big estate tax regime. We haven't had a high estate tax exemption for almost 2 decades. All right. So the idea that all of a sudden now out of nowhere, date of death asset valuations will be inflated. All right. So here's what this means. Essentially, you cannot inflate date of death assessments if you have your brokerage firm doing it. All right, so you've got to make sure your brokerage firm gives you a date of death valuation if you're the executor, if you're the trustee, of grandma's account. You've got to do that because you just simply can't have the IRS auditing you. Say, how did you come up with these numbers? Well, you just pulled it out of the air. That's not going to work. If you have it done by the custodian of your assets, it's completely legit. It's easy to figure out too. So now a lot of people say it only affects the rich. Bull crap. The step-up valuation is for everyone. Middle-class taxpayers are the one who benefit from it most. I talk about step-up valuation a ton in that step-up basis and how you need to take advantage of it. Now, whether they're talking about date-of-death valuations on other things like rental properties, I don't know, you got some business concern or something like that. Look, the average Joe among us don't have that. All right, so just I'm not that worried about it. If there is some, shenanigans regarding that, well, that's what the IRS should focus on. But for us, just regular people, all right, not these rich guys, regular people, we have to get a date-of-death valuation from your brokerage firm. Make sure they do it. Ask them before your grandma dies. Will you provide me a date-of-death valuation? If they say they're not sure, if they say, I don't know, you need to find a new one. I'm telling you, I was at USAA, and it ticked me off, ticked everybody off. All of a sudden, out of nowhere, 2000, I can't remember, it was 2012, 13, they stopped doing date-of-death valuations, and we screamed bloody murder. And the bosses were like, what's the big deal? I'm like, man, are you that removed from reality of what people go through on a day-to-day basis? People die all the time. When they die, the executor, the heirs, all the people who are in charge of the estate need the date-of-death valuations so they can see what the step-up basis is. And remember, step-up basis is simply, I bought a stock for 10. When I died is at 15. There's $5 of unrealized appreciation. That $5 is forgiven and under the step-up basis rules. Now, it's not in an IRA. An IRA is completely different. This is non-IRA, i.e. taxable accounts. So a step-up valuation, step-up basis is a gigantic, wonderful tool for estate planning, but only if you can get the date-of-death valuations. And so USA for about 2 years, it was like, it was bad. I remember we had guys like millions of dollars who were paying us big fees, and we had when the dad died, we couldn't provide a step-up date-of-death valuation. It was absolutely. I was actually threatening to quit. I was so mad by that. I said, we're going to take advantage of these guys' fees. Offer them services, but the minute he dies, we're not going to help him on the estate. It was nuts. And finally, they got their head pulled out. But anyway, you got to get that date-of-death valuation. So what happens is you call your brokerage firm and say, hey, Gramps just died. I need a date-of-death valuation. And they'll provide it to you without question. It's not hard to do. They just look at the average, and this is how it typically works. The stock opened at 10:14 on, at 9 o'clock. Was it 9:30 markets open? It closed at 10:23. They gave an average to close that day, and they say it's 10:17.50. That's the average. Thus, that's a date-of-death valuation. So that way, on the date of death at 17.50, anything underneath that is free and clear of any taxes going forward. Anything. All right. So just keep that in the back of your mind. You got to understand the date of death valuations. Please, if your firm doesn't accept it, you need to find a new firm. All right. So anyway, the whole point about this is we got these lawyers with nothing better to do apparently than gripe about how we're not getting enough on estate tax. Thus, we better stop the estate tax stepped-up basis because it's all subject to shenanigans. This is something new. It's just nuts. All right, we'll see you next time. Thanks.